Morning everyone, welcome to Ainsley News. It's Monday the 6th of December. The Aussie dollar hits 60 handle and more to come. Friday night saw the latest NFP employment figures out of the US, and whilst it was a big miss in the number of newly employed at just 210,000, the unemployment rate dropped as participation remains stubbornly low. This has experts wondering if the participation rate has been structurally changed by COVID. As always, a few charts there today, so jump over to ainsleyBullion.com.au, click on news, and you can view all of today's charts and also reread the news with more detail. This from Credit Agricole. Greater uncertainty continues to surround the US participation rate, whether or not it will return to its pre-pandemic levels. US policymakers are indeed still trying to assess whether the pandemic has ultimately left permanent structural changes across the US jobs market, which, if true, could mean that the Fed may be forced to raise rates earlier than they thought initially. In any case, most of the H122 may be needed for such an assessment, which could in turn see the USD flexing its muscles against the low-yielding currency whose central banks seem stuck in ultra-accommodative stance forever, namely the JPY, it's over in Japan, and the CHF. Later in the day, only a surprising downturn may eventually take some shine off the US dollar. Our Aussie dollar hit a 60 handle in response, and sitting at 69.99 at the time of reading this news today. You can see the Aussie dollar has been in decline since early this year. Indeed, you will also see that after the COVID bounce, the Aussie dollar firmed as gold fell after the everything is awesome again trade from mid last year. It then started falling from March. At the same time, gold bottomed and has been heading up since. Macro business chief strategist David Llewellyn-Smith believes this is just the beginning of further falls for the Aussie dollar. DXY was only firm in response to the BLS, so why did the Aussie dollar get smashed? A few points from him. This is them here. The US unemployment rate is now 1% lower than Australia's. This is becoming embedded in an inverted yield spread at the short end of the curve, even if the long remains diluted on Australia. If the US participation rate does not lift soon, then the Fed will be forced into earlier and steeper hikes. This is obviously growth negative and being priced in a pancaking yield curve. Indeed, the belly of the OIS curve has inverted. Then we have Omicron, which is spreading like wildfire in South Africa and does not look especially different in terms of health impacts. So there's a safe haven bid building into DXY and away from risk currencies like the Aussie dollar. Europe is lurching towards virus lockdowns. Sure, China is stimulating, but only slowly, and the key commodity-intensive property sector is still reeling. The Aussie dollar technicals now look pretty close to disastrous as well, and markets are not so short that they can't get more bearish yet. It isn't a pretty picture for the Aussie dollar, as the global economy hurtles towards a mid-cycle slowdown that increasingly looks like it could take on the outlines of a mini-recession. A falling Aussie dollar just propels the calls for higher US dollar spot gold to even higher levels for us. Bit of a win there for Aussie dollars, and in gold that is. Whilst not of the order we spoke previously about in Turkey or Venezuela, a devaluing Aussie dollar means you lose value in your currency, but if you hold gold, you see a lockstep appreciation in your money, or as we like to say, real money. And that's news for today. If you are interested in buying some gold, jump over to ainsleyBullion.com.au, choose from gold, silver or platinum. Interested in crypto? We did have a bit of a dip in BTC and a few other cryptocurrencies late Friday throughout the weekend. Go and check out pricing there. It could be a great time to buy the dip. That's ainsleywealth.com.au for all things crypto, and goldsilverstandard.com. That's our own crypto built and backed by real gold and real silver. Another great way to buy gold and silver. We'll catch you tomorrow for more news.